Hello and welcome to Tax Deed Funding. It's capital to help you, the tax deed investor, 10x your business. So let's get started. So what's on the agenda? Well, we're going to go through exactly what tax deed funding is, who is tax deed funding for, how does it work, what qualifies, what does it cost, what are the requirements, and what the next steps are. So what is tax deed funding? Well, it's a way for investors to access equity in their tax deeds before or after having insurable title. This is not a loan or mortgage. It is 100% asset-based funding, so there's no credit check, that sort of thing. And it is actually available during or after the redemption period. So you don't have to wait until the redemption period ends in order to access the capital that we have for you. So who's it for? Well, quite frankly, it's for any tax deed investor that has a winning strategy, but might be limited by cash. And so all of you that have done this for a while know that it's a very cash intensive business. And so if you'd like to 10x your available cash, then this is the perfect strategy to do so. So how does it work? Well, to break it down into 3 simple steps, you go through a pre-qualification that just proves that you know what you're doing, have a winning model. And then once you're approved, we move into the phase of funding you, the investor. That process is repeated and basically goes through you submitting the property, we do the underwriting, and then we fund you as the investor. And part 3 is basically you as the investor, finishing the disposition of that property, repurchasing it back. In more detail here, I guess the way it works, think of it as refinancing, right? You still need to go to the auction and purchase that tax deed with your internal capital. You can then come to us immediately after that auction. It can be the same day, the next day. You don't have to, again, you do not have to wait until the end of the redemption period. And then you submit that property for us to fund. As long as you've done your homework right, you purchase that property for less than 65% of as-is value, market value, then we'll proceed with closing. And basically closing is you assigning that tax deed to us, we giving you the purchase price of that tax deed back up to 65% of market value. And then we hold that for a period, right? And during that term, right, is really the repurchase period. You have the option to purchase it back at any time. You don't have to wait 6 months. There's no early payment penalty, anything like that. But once you're through the redemption period, and you're ready to purchase that property back, and you can go get traditional bank financing, usually after some sort of title certification or quiet title process, then you would want to acquire that property back or sell it to an end buyer. Either way, we can work with you, and basically the process is in reverse. You are now providing the capital to us, and we're providing the tax deed back for the same price that we provided the capital to you, with interest involved. And that's it. So how does it work? Well, timelines, the pre-qualification is typically within 24 hours. It's pretty fast. The funding itself, it does vary depending on the property, but is averaging about 5 to 10 business days right now. And then closing is typically 15 to 20 business days, but can be as little as 5 business days following approval. And we do have term lengths up to 18 months. Again, this is not a long-term financing option, but is intended to get you where you need to be in the states where there's a redemption period. So what qualifies? Well, certainly single-family homes, but we do actually work with multifamily, 5+ unit properties. We'll work with vacant land. We'll even work with commercial properties. The underwriting process and timeline may vary a bit for the multifamily, vacant land, commercial, and we do require a full commercial appraisal on those type of assets. So it does vary with the timeline, but we're happy to fund those types of assets as well. The advance rate, this is a key component, right? So if the property currently has or can obtain title insurance at closing, either through a title certification or quiet title, then we'll provide a maximum of 65% of as-is value. Now, the key is that this is as-is value, not as repaired value. So whatever state the property is in is what we're valuing it at, not what it would be if it were fully remodeled. If the property does not have title insurance. Basically, if it's during the redemption period, then we'll provide a maximum of the investor's purchase price. Now, this does vary a little bit depending on the redemption rate and the value that supports those terms. But the idea is to get you back the capital you spent on that asset so you can go buy more. That's what we want you to do. Where are we at today? Well, we're currently in 12 states, Michigan, Illinois, Indiana, Ohio, Pennsylvania, Maryland, Tennessee, Georgia, Florida, Mississippi, Arkansas, and Texas. But it doesn't mean we won't move into other states. So as soon as we were able to provide a minimum of $500,000 in capital in a state, then we'll move into that state. So just because you may not have assets in these 12 states today, please still submit them. Chances are others have submitted requests as well. As soon as we have an aggregate amount over that 500K mark, we'll go ahead and open up that state and could open it up for you as well. So what does it cost? Well, I think the key here is how it works compared to traditional capital partner, right? So call us a funding source, but we really want to be your capital partner, right? So what does a typical traditional capital partner request or provide, right? They want a share of that upside, right? And that typically equates over to 50% of the interest in that property. Our program is a fraction of that and basically provides the exact same thing. You do have to have some startup capital to purchase the asset, but we'll give you 100% of that back. So you can go do this, 10 times with whatever capital you have, so you can scale up very quickly. And in general, I would say if you have a capital partner that's providing, capital to you at a, let's say, a relative interest of 15% or less, then I'd say you have a great capital partner and keep them. If your capital partnership, if you have one or if you don't have one, is more than that, and most are more than that, many request a 50-50 split of the profits, that sort of thing, then we're a perfect fit. It can reduce your cost of capital. Our rates, they can be as low as 12%, right? There's a few variable options. This is part of the first step is we'll work with you depending on whether it's insurable title, uninsurable title, depending on the term length, 6, 12, or 18 months. And then we do have a monthly payment option and a deferred payment option. Deferred payment meaning you don't make monthly payments, there's just the interest accrues over time. So all of those have a bearing on the interest rate. And so depending on what program works best for you, we can get you an exact quote on the rates at that time. So what are the requirements? Well, to 10x your capital, you must have successfully purchased a tax deed. We want to know that you know what you're doing. This isn't necessarily for absolute beginners, but it is for folks that have gone through the process and have purchased something and do have a successful model. And at least $10,000 in current capital or equity in tax deeds owned. You don't have to have it all in cash, right? So if you have $10,000 of tax deeds you purchased, that certainly qualifies, and actually we can probably provide you the funding on that $10,000 in tax deeds. So if you have at least $10,000 in a combination of cash and tax deeds owned currently, then you would qualify. It's that easy. So what are the next steps? Well, that's it. You can press next to continue to the next step of this application and complete that. Please ensure you've got a copy of the tax deed or the receipt from an auction. We do understand some states don't give you a deed at the auction. You might get a receipt or confirmation, and all of that is perfectly fine. And a copy of a recent bank statement. Those are the two documents you'll need to complete the application. We wish you the best of luck with your investment ventures and look forward to working with you.